maybe you could just give a broad overview in whatever order you wish on things people should consider when going through a divorce, pre-divorce, after the divorce, when it comes to auto insurance and life insurance.
Yeah. So obviously this is a difficult time, and insurance is not the thing that anybody's really thinking about. There's a lot more serious issues going up. The thing that comes up a lot is you have the divorce situation, or at least, I guess you'd say pre-divorce, but you're still separated. So you're living in two different houses, and and the kids, and they're like, well, the kids live here 50% of the time and they live with their father 50% of the time, or, whatever that arrangement is. And that actually impacts the auto insurance. Because that means the kids are driving the cars in the father's house and the kids are driving the cars in the mother's house. And now you're paying double for kids. Tim, you mentioned, it's more expensive to insure, younger drivers. Well, I think inherently people understand that, but you don't think about that. So one of the things that we recommend in those situations is to say, if there's an opportunity to get a car to give to your kids and let the kids take the car back and forth, then only one parent really needs to insure the car, and maybe they need to split the cost, however that works out. But you're only paying for a kid's rate on one car instead of paying for it in two different houses. So that's something to think about if there's an opportunity, if you live close enough for that. One of the other challenges that we run across is because a lot of times both adults, the people who are going through the divorce, are registered on the car. And so if there's going to be a separation or a divorce, one of the things to think about is to, re-register the car in one name or the other, whoever's going to keep that car, because in that way you're eliminating that exposure for the other person. So if I've divorced my wife, I don't want to be on her car. I mean, she might be, if her driving is not great and something happens and my name's on that, I can get pulled into it, even if I'm, and especially if I'm still married. By definition of the insurance policy, I could get pulled into it. So,
wow, good to know.
Can I ask you a question on that, John? Is it
sure?
Is the exposure or liability because you're a registered owner on the vehicle, or because you're on a joint policy?
It's more about being the registered owner on the vehicle. So a good attorney is going to look and say, well, gee, one divorcee doesn't have the assets, but look, the second divorcee or the other person does have assets, and they are still registered owner on the policy. So they're still owner and they can be held responsible.
Wow.
So decoupling that exposure is a good thing. So yeah, it's not really the insurance policy that does that.
But they could theoretically be on the same policy and one be registered on one vehicle and one on the other, or is there? I think we had just clients last week that were saying that their insurance company did not allow them to remain on the same policy. They had to get separate policies. Does that happen? Is that brokerage independent?
That's correct if they're not living in the same household. So at that point, whether they're divorced or separated, legally separated at that point, if they're in two separate houses, there really should be on two separate policies.
So what would happen, or what issues could come up? Because I handle cases where they've been separated 6 months, a year, 5 years, and they've maintained their insurance policy together. What liability could they be facing, assuming they're on a joint vehicle, but specifically on the same policy, when technically they shouldn't be?
Yeah, so it really comes down to what the carrier is going to do with that. So it's like anything else. If you say you live in Santa Barbara and you actually live in LA, well, the rates are cheaper in Santa Barbara than they are in LA. So the insurance company could say you're quote unquote committing insurance fraud and deny a claim. So if you've got two, people who are separated, living in different households on the same policy, claiming to live in the same household, then if there's something major, the insurance company could go back and look at that and say, hey, this wasn't done correctly, and they could use that as a reason to deny a claim. I mean, it's a little far-fetched, admittedly. If it's something small and minor, no one's probably going to pick up on it. But at the same time, you're back to that shared exposure when you're really trying to decouple your life. And so if you're trying to decouple your life, I don't know how you share an auto insurance policy and go, okay, every month you need to pay me this much in order to, make the policy whole. And then if they don't pay, you can't just say, all right, I'll pay for mine and not his. because the policy is the policy. It needs the premium for both to be paid. There's just a lot of inherent issues with it that we recommend that you just have two separate policies.
How often do you see insurance companies actually trying to not pay the policy? Is that almost 100% of the time? Or, I mean, what I mean is like investigating, looking at all the I's dotted, T's crossed, just so they don't have to pay it? Do they have somebody working for them that does that specific job? Or
yes, so
Okay.
all insurance claims departments have what are called SIUs, special investigation units,
Oh,
that look into things. I will tell you, and again, I think it kind of depends on the book of business you have. So the type of people who value what we do are usually not the same type of people who are going to be out there doing things that are fraudulent. So we don't see that very high as a percentage. And as a whole, I'm sure it's a very low percentage. When I worked inside at Farmers, that number was pretty low in terms of the, per like 100 claims. I mean, I couldn't give you an exact number, but it's not, like, wow, 50%, they're looking for ways not to pay. That's really not the insurance company's mentality. The insurance company does collect premium with the idea that they will be paying on claims. And they want to have good customer service because obviously they want to generate more premiums coming in. So for the most part, the insurance companies are looking for ways to pay the claim within the scope of the policy. But occasionally you do come across things that, you look at and you're like, yeah, that just doesn't really look right or sound right. And in those cases, they do have a special unit to look into that a little bit deeper. Or, you think of the private detectives that run around going, hey, this guy claimed he was injured in workers' comp, and you see him playing softball on Sunday, running the bases at full speed going, yeah. So somebody might be, watching that guy as well, because again, that's your money. You want to make sure that they're not paying out all this fraudulent money because that's just going to raise your rates.
I assume, John, they're looking also to, when they can, mitigate their losses. I know when I had, going back to why it's important to have an independent broker, Connor, is when we had the water damage in our home, I called the insurance agent company, made the claim. You do it over the phone, and then I also somehow it came up, and I called John, and he said, "Oh, I wish you would have called me first." So I assume that in our case, we said, hey, yesterday we noticed, the wall was wet. We pulled the bed back. The floors were wet. And, it was a little bit more story to that. But I imagine if I said, hey, I noticed a water leak and the wall's wet 30 days ago, and now the floors are wet, this might have been a different story.
Yeah, so we do encourage people to call us as soon as they discover something, because one, we can either prevent you from going down a road that's not going to be a covered claim anyway, so prevent a lot of frustration and get you started on resolving the claim. And other times, I'll give you this is a great example, and it has to do with auto. But if you're driving down the freeway and say an object, a car in front of you kicks up an object and it hits your car and damages your front end or something, well, that's if you say I hit an object on the freeway, that's a collision claim, and that's going to be chargeable. That's going to increase your rates. But if you say that car in front of me kicked up something and that flying object hit my car, that's a comprehensive claim, and that's not chargeable. So, a lot of times it depends on how you call on the claim. And I'm not saying make up a story or anything.
No, what's chargeable? I'm sorry, what's chargeable? What
increase your rates? So like if you have an accident that's your fault, you expect your rates to go up.
Sure, right.
That's chargeable. And if you have an accident that's not your fault, you don't expect your rates to go up. Okay. I mean, that's so that's what I mean by chargeable. Your rates go up.
Okay. So getting hit by an object on the freeway that gets kicked up by another car, that is chargeable or is not?
That is not.
Is not.
But if you hit that object, if you say, oh, I was on the freeway and then all of a sudden I hit this tire or object or whatever it is, guess what? They're going to charge you for that because it's a single vehicle accident.
Yeah, you're driving too fast to avoid it, so it must be your fault.
And if it's a flying object, then at that point, it's a so we using that as kind of a simple example, but we like it when people call us with their claims first, because then we can go over the process with them. We can explain what's going to happen. We call it in for them, so they're not sitting on hold for 10 minutes waiting to get to somebody. Again, it's part of that value, but it's really about letting you know and giving you a realistic expectation of what should happen.
John, we were talking about the auto. Now we're back on auto insurance, but I want to jump
Sure.
back over to the homeowners. Is there any? We have this phenomenon going on lately where because of interest rates being so high and people going through divorce, they are opting not to like if they're going to buy out their spouse, they're opting to keep it jointly, even though the intention is one spouse is going to remain in it, and for a period of one spouse is moving out, but then for a period of time waiting to hope the interest rates will come down so that they can then refinance. On the homeowners policies, is the homeowner insurance policy tied to the owners of the home or the occupant?
It's tied to the owners of the home primarily.
Okay. So they would keep it together until which time that changed?
Right. So you could have a divorce situation where, say, one of the spouses moves out but is still entitled to the home. We would still say that spouse would stay on the insurance as well, because if something happened to that home and there's a fire, you want the check to be written to both. Nobody wants to give up that right and only have the check written to the one that's staying there. Same thing with a liability claim. You want that liability coverage to extend to either spouse, whether they live in the house or not.
That makes sense.
Yeah.
And I think that anything we missed on either auto or homeowners when it comes to divorce?
I don't think so. We covered the kid situation and the ownership. So I think that's pretty much
cover
everything there.
Good information. Jumping over to life insurance, can you just maybe talk about high level what you should consider when going through divorce, or maybe some scenarios you've dealt with doing this for 30 years that you may have come across?
Sure. So the most obvious one is dealing with the beneficiary. You have a policy, your spouse is the beneficiary, you go through a divorce, what happens? So first of all, the natural reaction is, I've got to get that person off my beneficiary. You're not even divorced yet. You're separated. You're going through that battle. In California, you can't take a spouse off as a beneficiary without that spouse's signature.
Oh, okay, wow. So, interesting.
So that prevents you from, saying I'm done with my spouse and just pulling them off without them knowing. They have to know. Okay, really? So that's one of those issues that you have to deal with.
Even if the divorce is finalized?
Once the divorce is finalized, I believe you can then take them off. But up until then, while they're still your spouse, I don't believe you can.
And that's actually doing so is actually parties going through divorce are restrained from doing that as well as part of the family law code for removing parties from the policy until they are effectively divorced without permission. So that probably goes hand in hand with what you're telling me.
Yeah, and I hadn't heard that part of it, so that makes sense. The other thing that comes up a lot is when there is a divorce situation, a lot of times a policy needs to be purchased. So, meaning, in I guess to describe this, one of the couple, one of the individuals would have to buy a life policy on their life, especially if there's a what's the payment called? When you're paying alimony, spousal support or alimony or something like that. If I'm paying alimony for my wife and the children, if something happens to me, something needs to take that place. So I would be required to buy a life insurance policy for a certain period of time to cover that exposure, to make sure that alimony and that child support will continue to be paid even if something happens to me. And that's a typical thing we'll see as well.
Yeah, we don't recommend or advise. We don't give legal advice here, but that is one of the things that we will bring up. Especially where there is a significant difference in incomes and the spousal support or alimony is significant, and where by losing that support there would be basically a total loss of income for the most part. Are those insurance policies more or less expensive when you have an insurance policy like that to cover spouse? Is it because it's under different circumstances?
No, it's the same. So it's still going to be based on my life, my health, my age, and how many years and how much coverage we want to buy. So the purpose of the insurance, whether it's for that, whether it's to buy out a business partner or just for my own spouse and family, well-being if something were to happen to me, the cost that does not change the cost.
If people were to call, sometimes you call you and say, I have to pay spouse support of $1,000 a month for 10 years. So that's what, $120,000. How would you make recommendations on an amount, or, that they should do coverage for maybe a 10-year term? Or is there like step down provisions where you would write the policy separately each year for the total amount of spouse support left to be paid? How would you do that?
In that particular case, it just does make sense to take the flat amount, the 120,000, if that's the math, for the $1,000 a month for the 10 years. Part of the reason you won't want to do, like we talked about, is step down and write a new policy each year. Great for the agent because they're going to keep getting commission each year on a new policy. Bad for the individual because what happens if their health changes? So, you're in year 4 and all of a sudden, you've had some sort of skin cancer issue. Well, guess what? Now that cost of insurance just went up dramatically to provide the same insurance. So we would do it as the 10-year term. We would basically match the term to the length of the settlement or the years you owe the money and literally multiply it out.
Do you find yourselves in these predicaments when they call you for this purpose to cover life insurance due to there being alimony or spousal support? Are they calling and saying, I want a policy for X amount, or are you kind of running them through an algorithm, or are you having to assist them with coming up with what amount they should write it for?
Yeah, it's really not. It's almost as simple as the way you describe it. They know how much that they're going to owe for how many years. And so there's really not a lot of extra to it. Now, we may recommend that they have a different life insurance policy if that was their only life insurance policy to cover other things for themselves. And they could take out 2 different policies for that purpose. Even at the same time, they could take out, 120 for like the situation you were talking about, and another 150 for something else that they wanted to cover on their own. So we may talk to them about that, but specific to that scenario, we will minimize everything we can to just meet the minimum for that requirement.